If you love dividend investing as much as I do, you should definitely consider owning some dividend kings. Now in this video, I want to talk about what dividend kings are and share with you my 5 dividend kings that I own in my own portfolio. But let's start by answering what dividend kings really are. And as the definition says, dividend kings are companies that have been paying and increasing the dividends over the last at least 50 years. I mean, that's quite a time horizon. For 50 years, more than half a century, they've not only been paying the dividends, but consistently increasing year after year after year. And if ever that streak was broken and they didn't increase or cut the dividends, they would no longer be a dividend king and the timer would basically be reset and they would start from zero again. And that's why there's only very few companies that really qualify to be a dividend king. To be exact, right now, there are only 55 stocks that qualify to be dividend kings at this very stage. Now, without going into too much details, but there's also something else called dividend aristocrat. So that's a little bit easier to get into it. So basically, they would have to pay and increase their dividends for the last 25 years. And they need to be a member of the S&P 500. To be a dividend king, you don't need to necessarily be a member of the S&P 500, yet many of the companies that are dividend kings also happen to be part of the S&P 500. So with this, let's have a look into which of the companies actually are currently dividend kings. So here you have the entire list. I'll put a link to this resource at the description below so you can check it out afterwards yourself. But yeah, basically you can see here all the various companies listed by the sector and the number of years they have been increasing the dividends. So you can see some of them over here. American States Water, not a company I'm very familiar with, nor am I invested in them, but they have been increasing the dividends for a staggering 69 years. I mean, unbelievable. And you see here a lot of companies. Probably many of them may not mean much to you and you never heard about them. And same for me actually. And I'm not really interested in owning all of them, but a few I really like. One of the more famous one is Procter & Gamble, also 67 years, a true multinational company. I mean, they own so many different products around the world and I don't think they're going to stop paying dividend anytime soon. Their business is very strong and growing solid. It's not, again, a company I invest in due to various reasons, but, obviously a company we all know and they will continue to pay their dividends going forward, I believe. Then we have another company that's probably pretty well known, 3M. They have actually been through quite difficult times in recent years, but at the same time, they have not compromised their dividend increases. And that's what I like about investing into dividend king stocks, because obviously they are part of a very illustrious circle of companies, 55 companies only to be precise. So now, just because they have a bad year to cut the dividends, automatically they will be excluded from the list. And a lot of investors who want to own dividend king stocks, they would not invest into the company. So even if for 1 or 2 years they struggle, they would still make sure that they increase the dividend just to continue the streak over here. Now we have seen companies that dropped out of it, but a lot of the companies, including 3M for example, will make sure they do everything possible to continue paying and increasing the dividend. So if you are a dividend investor, that's obviously very reassuring. But this is the past, right? This is what they did in the past over the last 60, 70 years. And that's great to see, but that's not a guarantee for the future because you never know what happens. A number of those companies might actually go bankrupt in the future. You never know, right? However, for me as an investor, it's reassuring if a company managed to survive and pay and increase the dividend for so long through all these difficult times, financial crisis, and all these global world problems that we faced in all those years, they still managed to pay and increase, gives me confidence that going forward, they most likely will continue to do the same. Again, not a guarantee, but it's highly likely. So yeah, then we go through here some other companies like Johnson & Johnson, a big pharma company you probably heard about. Colgate over here. That's actually one of the products I use every day to brush my teeth. So yeah, definitely some recognizable brands over here you might have heard about. And obviously some of those I'm going to touch on in a second. But yeah, this is the list over here. So you can have a look through yourself. But as you see, all different sectors from utilities, consumer goods to industrials, healthcare. So it's good to see that it's not just one industry that has been thriving for so many years, but different companies across the board. So now that you're clear on what dividend kings are, let's dive into the 5 that I personally own. Again, this is not a buying recommendation. These are just companies that I understand, I like, and I've seen great results with them. And I'm a happy dividend investor into them. And for that, I'm using my stock research tool of choice, which is Seeking Alpha. Great tool if you want to learn more about stocks, get some great articles on them and deeper insights into the numbers and how the company is composed of. Great tool. I'll leave a link down in the description below. You can check it out. Usually get a free trial with my link, even some discounts if you sign up there. Right, and the first one, how else could it be, is Coca-Cola. I mean, that's probably a company that doesn't need much of an introduction. Everyone knows it around the world. And they have a very easy, understandable business model and has been growing and doing well ever since, right? They've been growing and growing across all these difficult years. Now, it's obviously not a high growth company. None of those companies are high growth. They're really slowly, consistently compounding and growing over time. So that's exactly what I want want, because I don't want a high growth company. For that, I have some other investments, but I want to invest into companies that are solid, that have been growing over time and doing really well. When I look over here, the last 10-year results, 57%, that's without the dividends, obviously. So in that way, it doesn't sound very much. But when I go into max return, that's since 1994, they have been returning a growth of 486%. This is a stock where I set it and forget it, where I invest every month or so some money, and it just starts growing and compounding over time. And I like that Coca-Cola keeps on acquiring new companies. Recently, they bought Prime Energy Drinks. They also acquired a few years ago Costa Coffee. Not many people are aware about this. So now, instead of going to Starbucks, I always prefer going to Costa Coffee, because when I go there, I feel like a shareholder. And obviously, I am being a Coca-Cola shareholder. I also own parts of Costa Coffee in a way, right? So that's really good. And yeah, here you obviously get a lot of analysis, news, and different parts. And Coca-Cola is always a stock that goes in and out of favor. Some people say it's a very boring stock and company, and it's true, right? It's nothing exciting. But over time, their revenues have been consistently growing, which is nice to see. And the EBITDA margin, their profitability, is around 30%. I mean, for me, that's really reassuring to see that they are a very profitable company, which is also very important, right? You don't want to invest into an unprofitable company that has the potential, but doesn't actually deliver on the bottom line. For me, that's always very important. So when we head over to the dividends, you can see here right away, they have been growing the dividends for the last 61 years. I mean, that's really a long period of time, 61 years to show the growth. Now, the growth is not the highest, obviously, 3.36 for the last 5 years. So that's every year on average, they've been growing the dividends by 3.36. That's different from the dividend yield. The dividend yield is currently 3.1%. That's what you get in terms of dividend payment. But the growth, basically it means if you don't invest any more money into the company, every year the dividends you get would grow on an average by 3.36%. So that's still nice to know. Of course, some companies grow faster than them, but once again, it's a very solid long-term play for me. The payout ratio is also always something to look at, because obviously you don't want to have a company that pays more than 100%. That means they would have to borrow money in order to pay the dividend. So with 68% is a little bit on the higher side, but I'm still confident that they'll manage to pay the dividend. That's basically how much of the profits they use to pay you a dividend, right? If they would use 100% of the profits to pay, that's not really sustainable for the long term. So the lower that is, the better it is, and the more sustainable the dividend payments will be. And when we look to dividend growth over here, you can see actually over the last 10 years, they've been really consistently growing year after year. And even if you wouldn't have bought any more of the stocks in 2014, you would get $1.22 for every share of Coca-Cola that you own. And without adding anything more, today it would be $1.84. So you can imagine, the more shares you own, automatically your dividends starts growing year on year on year, which is really good and nice to see that. And you can even go into dividend estimates. But of course, these are just estimates, but you can see even here in 2025, it might reach over $2 already. So soon you would almost double your dividends. That's really the power of long-term dividend investing, because it really starts to compound and start snowballing. And the more you also invest, the more money you have, you get the dividends, you reinvest the dividends, and it starts growing. So that's really what I love about dividend growth investing. Right, with this, let's move to the next company. And it's almost similar to Coca-Cola, actually the closest competitor, you could say, and that is Pepsi. Now, I'm not here to discuss what is better, Coca-Cola or Pepsi. Actually, I don't drink any of those. I stick with water and coffee, but I know a lot of people do. And once again, Pepsi is a company that doesn't just have drinks. They have a lot of different drink categories that they offer, but they're also very strong in food, much stronger than Coca-Cola actually. They have so many various food categories as well. As you can see here, Lay's chips, Doritos, some hummus even some oats, especially in the snack category, they're very strong, which I like. They're more diversified in that way. As you can see over here, if I go to a 10-year chart, also strong performance, actually stronger over the last 10 years than Coca-Cola, but they're also a little bit smaller, so they had more room to grow. Over 10 years grew by 109%. And if I go back to the maximum right now, at least the maximum that is shown over here since 1994, it grew by 779%. So that's a really strong number and really good to see that. The same with the revenues. You can really see here year after year, it has been steadily growing. So I always like to see that. Now the EBITDA margin is a little bit less than Coca-Cola, but still quite healthy. They're also organically growing and inorganically, meaning they acquire new brands. So that's really reassuring. They're reinvesting and having good returns. You can see return on equity is actually quite high. So that's also a good number to have in mind. When we head over to the dividends, once again, you can see here some nice numbers. They've been growing the dividends for a little bit less, only 51 years. Actually, last year was a big year for Pepsi because they became a dividend king. Previously, they paid only for 49 years. So then they hit the 50 years and they were officially inaugurated to be a dividend king. Previously, they were not. So that was obviously good. And definitely it gave a big boost to Pepsi because now more people who are more conservative investors, let's say, they start to invest into Pepsi. You can see the 5-year growth also much higher, than we've seen with Coca-Cola, for example, almost double. Previously it was around 3 something, now it's 6.63%, so that's really good. If you wouldn't invest anything, every year over the last 5 years at least, your dividends would grow by 6.63%. Payout ratio similar, even slightly less than Coca-Cola, so that's also reassuring to see. And right now the dividend yield is at 3%. Actually, you can check also the dividend yield, how it developed over the years. We'll click over here, because dividend yield is basically the percentage of dividend payout versus the price of the stock, right? As the stock price comes down, but they keep on increasing the dividend, so then the percentage might be higher or lower. That's why you can see some years it was even over 3.5%, but on average it's just hovering just around the 3% mark. I mean, they will not pay 5 or 6%, and rightfully so, right? If they would pay that much, then obviously eventually they might run out of money and it wouldn't be sustainable for the long term. So I'm happy when companies don't over leverage themselves. And of course, you can see the dividend growth year after year after year. So you can see actually within 10 years, you almost doubled your money. In 2014, it was $2.53, and last year almost $5. So you almost doubled your money without investing additionally. So that's the power of dividend compounding over time. By the way, if you want to learn more about how I evaluate dividend stocks that I invest in and what you should be looking out for before buying, then I made a free guide for you that will guide you through the process. And if you want to get it, just click the link in the description below and I'll send it right over to you. Now, the next company we talk about is Altria. That's actually a tobacco, smoking or vaping company. And yeah, I understand not everybody feels comfortable investing into that. That's totally fine. I don't smoke myself, but honestly, when I go outside, I see every second or third person either smoking or vaping. And again, that's totally legit and legal, right? So as long as that is, and people do that and spend money on it, why not to benefit from it, right? The same with Coca-Cola and sodas. They're not particularly healthy for you, but people do it anyway. So why not benefit as an investor? I don't see any complaints with that. And actually, when people invest into the S&P 500, technically, you will also be owning all the 3 companies I mentioned before, including Altria. So if you're really against that, then you shouldn't be investing into most ETFs because they are part of a lot of those. But anyway, be it as it may, as I said, I'm invested into them. I have seen some really good returns from them over time, especially the dividends. And I'll come to this in a second. Now, the 10-year return is actually very little because that's a company that pays a very high dividend, but the price appreciation of the stock is not really happening. On the contrary, it's actually, you can see in recent years coming down. That's what I'm also thinking. It's not a future-proof company. I don't think I'm going to hold them for the next 20 or 30 years. But for a few more years right now, they're really paying me a very high dividend. So just for you to understand what they do, basically they have companies like Marlboro and also some other products. Again, I'm not a smoker myself, so I don't really know them. They're now trying to push and go into vaping and all this kind of modern way of smoking. Again, I'm not really familiar of what the latest trends are in that, but it seems to be popular. They're going with the times, and that's all good and well. Again, not a company I think I will be holding for the next 30 years, but for the next couple of years for sure. And you can see the revenues at least continue to stay stable. Now, I don't see major growth there, but also if I would start seeing a major decline, then of course I would think about it if I really want to hold on to them or potentially sell. But one of the reasons, as I said, why I'm holding them in the first place is the incredible dividend at this stage. As you can see right now, I'm almost getting 10% dividends from that company. I mean, that's really, really good. 9.75%. That's a huge amount when you think about it. You invest 1,000 euros, you will get 100 euros paid to you in dividend. I mean, that's a significant amount. Most usual dividend companies I hold pay me anywhere from 2.5 to 4, 5% maybe. So that's definitely the highest paying dividend stocks I have in my entire portfolio. And that's why I like it, right? And still, the payout ratio at 76% is still manageable. If I start seeing revenues falling off, the payout ratio going to 80, 90, 100%, of course, then I would reconsider and say, okay, I got enough passive income from them. I will start selling it. I still made money from the dividends and I'm good to go. So it's, again, I feel very comfortable with them right now. And you can still see the dividend growth rate over the last 5 years. It's still a surprising 5%. I mean, that's really good, higher than Coca-Cola. And they've been growing it for the last 54 years. Once again, I mean, that's quite a track record and gives me confidence that they wouldn't just abolish paying or increasing their dividends overnight, right? That would be kind of reckless for them to do because they would drop out of the dividend king list and then they would become way less desirable. And you can see here the dividend yield over the last 10 years, it hardly ever was that high as it is right now. It used to be even way less, 3, 4, 5%, and now close to 10. I mean, that's really nice and that's why I'm excited to buy more of it. Again, it shouldn't become my biggest position, definitely, but have some of it to pay me this passive dividend income. I really quite like it. Now, one thing to keep in mind when you compare it to the S&P 500, which is something I always do to kind of benchmark, to kind of get an idea how the stock is doing relative to the market, in this case, the S&P 500. Now, when I look at the price return, just the stock price alone, how it did versus the S&P 500, over the last 10 years, the S&P returned 174% increase in their price, while Altria only grew by almost 15%, so quite a big difference over there. But when we factor in the dividends, it's a different story. obviously it's still behind the S&P 500. Now, 230% return for the S&P 500. That's why I always say it's a great investment. Buy an ETF into the S&P 500. You can't go wrong. But Altria, you can see the difference from only 14% invested with the dividends, you still managed to get 110% return. Now, obviously, you could say, Kai, why didn't you just buy the S&P 500? And I totally get it, and I do. I have some of my money in there, but at the same time, as I said, I'm a dividend growth investor, and I start seeing that compounding over time. So I want to get that passive income to live off. I don't want to have to, when I'm old, sell my stocks and then try to find a good time when it's a good time to sell and time the market. That's never a good thing. I want to get and live off that passive income in a couple of years from now. Now, talking about the S&P 500, as you might know, S&P stands for Standard & Poor's, and that's actually a company, and the company behind it is S&P Global, and that's yet another dividend king that I invest in myself. It's probably my smallest position right now out of all of them, but I'm increasingly excited about the company. They do a lot of data analysis, aggregate data, and honestly, a really trustworthy company. And you can see here the performance since 1994, it's up by 5,400%. The last 10 years alone, 462%. So that's definitely the highest growing company out of the 5 I'm owning in terms of dividend kings, and something I'm really bullish in. And they're very lean. You can see over here when I go down in terms of revenue, firstly, obviously the revenue has been really growing very nicely. But also when I look into the profitability, you can see the EBIT margin 35%, the gross profit margin 66%. So they're very efficient because they mostly deal with data. They don't have big infrastructure like Coca-Cola or high cost of sales. They have a few smart people, more and more AI behind it, and the rest is just data that they use, compile, and sell for other companies. So really, really powerful company. I definitely recommend you to read more up on them. And yeah, when I look into dividends over here, you can see they've been paying and growing the dividends for the last 50 years. So also just recently it became a dividend king. And more importantly, the dividend growth rate is 12.47%. I mean, that's absolutely unbelievable. Year after year after year, you would get an increase, at least over the last 5 years, of more than 12%. Now ask yourself, are you getting a 12% annual salary increase? For most people, the answer is probably not. So this is really nice to have in your portfolio and see the dividends growing year after year. And you can see here the low payout ratio. That means they're so profitable and they only currently use a very small part of those profits to pay out to investors. So again, for me, it gives me really confidence that they will be able to do this for so much longer and also continue to hike up the dividend going forward. Now, the dividend yield, of course, is very little right now because they have so much growth ahead and they're paying out very little. It is very low, but interestingly enough, if you look at dividend yield and more particularly the yield on cost, meaning if you would have bought the stocks 10 years ago, the dividend yield you would have on your cost right now would technically be the equivalent of 4.55%. So now it starts getting really attractive. So that's the difference of having a high dividend payer and low growth versus, in this case, a low dividend payer but high growth. Over time, after many years, in many ways, such a company can actually outperform some companies, for example, Altria, that have a high starting rate, but a very low growth. So that's something to keep in mind. And if you want me to make future videos about this topic, comparing the different types of dividend investing you can do, just comment down below dividend growth, and I will make a video on that. And the fifth and final company of my dividend kings in my portfolio is AbbVie. Now, AbbVie is a great company. Basically, as it says over here, they discover, develop, manufacture, and sell pharmaceuticals worldwide. So they have a number of leading medicines out there, which they're famous for. And that's kind of their blockbuster sales that generate the majority of their income. But yeah, definitely a very interesting company. So for the last 10 years, grew by 235%. So that's really not too shabby. And if we jump back into the dividends over here, we can see also the dividend yield is definitely quite attractive. Usually I am for anything over 3.5% because otherwise, unless they have really high growth, it is a very small amount that I get in dividends. But anything over 3.5% starts getting interesting for me. And you can see right now, they also have a very strong growth rate. Now here you will see the dividend growth of only 10 years. And you may say, well, Kai, that's not 50 years. They're not a dividend king company. But obviously, when we go back to the list, you will see AbbVie over here. This is just because a few years ago, they separated into 2 different companies. So in this case, they're now being treated as a separate entity. But AbbVie itself has been paying obviously over 50 years. So that's just something to keep in mind. And of course, the payout ratio is right now less than 50%. So for me as an investor, that's reassuring that they will be able to continue paying and increasing the dividends, even if they happen to have a tough few years, because that way they have a bit of flexibility. That percentage might go up, but they still have enough money to be able to pay to investors. And there you have it, my 5 dividend kings that I have in my own portfolio. Now, in addition to those, of course, I also own some other dividend growth stocks, plus of course some S&P 500 shares as well. If you enjoyed this video, then this video over here will also be very interesting for you. As always, stay healthy, get wealthy, and I'll see you in the next one. Ciao.